weekend all. Ira Epstein of Linn Associates with your weekend wrap-up for your financial markets, and this is for Friday, March 6, 2020. Well, the big event, of course, is what's going to happen over this weekend with COVID-19. Don't know if you're aware of it, but South by Southwest, the monstrous event that takes place in Texas, just canceled. Just multiply this times other events that are going on all over the United States. In Chicago, we have McCormick Place. It's seeing cancellation after cancellation. And what if the disease picks up momentum? That's what we don't know. We know that we're watching a credit market that is under assault. In other words, interest rates collapsing. You're down to 0.773 in the 10-year note, the benchmark, 0.773, historic lows. But let's go to the charts and see what they tell us. The monthly area chart of closes is still over the 18-month moving average. That is still a friendly market, and it has been that way. Once it, from 2018, had that one spike and got over it, hasn't got back under it. I think you have to become concerned if you close under 29.10. We haven't done that at this point. When I come to the weekly charts, you've been in a free fall. Now, we had a bounce this week from last Friday. I know that you know that, and for the week, it doesn't seem like it, but you were up 0.44%. Hard to believe. When we look at the action, now you can see why it's hard to believe. You had a vertical price dive. The markets had a bounce back up. Is it into a 50% bounce area is what you have to worry about. The other thing you have to worry about as you look at this, you're not trending. This was what I call a panic move, where you came in from 33.97, crashed immediately into this what was the low of that week right here? 28.53, and you've got a small bounce now back up to 29.64. It's not a heck of a bounce, but what a move that was. And where are you? Where the market is trying on the weekly moving averages, not daily. It's a difference between how you look at the moving averages on both. It held the 100-week moving average. It's rallying with resistance at the 18-week. I'm going to repeat, not a trend. A trend would mean you have lower highs, plural, lower lows. This was a vertical price drop. From there, the market's going to decide what the next step is. What else did you do? Last week, if you'll remember, this was the first test of the lower Bollinger Band. I often say here that the first test is where pros take some money off the table. The world looked like it was collapsing, and you've had a bounce from there. I get it, but it's a bounce, not a change of anything, and like that, you can be in trouble as we come back on Monday morning, or actually Sunday night, if bad events with COVID-19 happen. And it could be great events. What if they find that it's not as bad in America? I don't know, but I keep hearing from the CDC, expect more cases. When we take a look at Bollinger Bands, you've got there, you can see the momentum with the stochastic still down. So I'm going to call this a bounce in the market, no more than that. In the NASDAQ, the battlegrounds, the 18-week moving average of closes. You never did last week make it too far down. You made a challenge here, as you can see. Got as low as 81.26, did not hit the 78.83 level and bounced away. That's an arrow I have pointing up there. Now, if this market starts down again, that is the first target, 79.82. In the Dow, you went down to the 100-day and the lower Bollinger Band. You will hear me say over and over, that is a powerful combination. And I realize you can slide through it. The 200-day is right over here, but it recognized that it was important. The second time through, it's a whole different world if that's what occurs. Again, the one thing you have on the weekly charts are higher highs, lower lows, not a true pattern in that. Let me come now back to the Russell. This is the market that's been the weak darling of everything. It's had the lower highs, lower lows. It didn't just happen with last week's big break. You'd already set it up here, then you fell apart. Even this week market, I always respect that first challenge of a lower Bollinger Band, and all you're trying to do is climb back into it, still acting bearish. The VIX, well, you're finishing off the week in the 41 level. It's strong, right over, if you can see, the upper Bollinger Band. You're up into this area. Let's see if the market still panics out. 50's a big number. Go back on your charts. You'll see how big that's been. Then we get to the 10-year notes, and this market is running ahead of the Fed. Now, the Fed meetings, the 17th and 18th coming up, you can see you've got higher lows, higher highs. A panic mode is the only word that I could call it. And no, I do not teach anyone that they should buy over an upper Bollinger Band. By the way, these moves are huge. You had a 5-point swing today in the bonds. That's $5,000, $6,000 almost that it did. In the dollar index, on a weekly basis, you were up over the upper Bollinger Band. You started correcting. Now, with this break, you made a low that's under that low. So prior to this, you had a higher low, higher high move. I always say, first challenge of the Bollinger Band, be careful, this market might come back to bite you. And that's just what happened. Now this should be an interim support area. The first challenge, I think the pros came out of that. Eurocurrency, first challenge of the upper Bollinger Band and 100-day average. I'm looking for the pros to take some money off the table here. We'll see if I'm right or wrong. Are we trending? No. You have a higher high, lower low. In other words, chaos in the markets is the right way to explain it. While the Canadian dollar, oil killing them, oil hurting the U.S. with these prices, keeps coming somewhat down, oversold, riding the lower Bollinger Band. The first challenge caused it to get back to the right-hand side of it. In the yen, this is the first challenge of the upper Bollinger Band. We didn't quite hit it, as you can see last week. You did it this week. Again, I think pros are going to take some money off the table up here. We'll see if I'm right or wrong, and the market starts rolling back a little bit next week. In Bitcoin, either way you can go here. If this market breaks last week's low, that low was 85.20, get nervous because you'd then have lower highs, lower lows temporarily. Now, I don't know how the week would finish up, obviously. I think this is the number the pros have to support, this 84.79 level right now, and try to keep the market going from there. In the Brent versus WTI crude, you know what's going on. No OPEC deal. Russia's not joining in. So Brent collapses. WTI's not as weak as Brent. And you see that in the differential. That's what took the market by storm. And in the Brent, wow, what can you say? We're wiping out years of move here, and this is still a bear market, very much so at this point. WTI following it. Both are getting under the Bollinger Bands. I look for them to move to the right-hand side of them, but there's nothing bullish on these charts other than they're oversold. And I've got to say, nobody's mentioning it on TV. You know, as the consumer doesn't go out to dinners in the U.S., as we don't go to the South by Southwest, as we don't go to other events, they're staying home and hunkering. Nobody's saying the consumer might have a few more dollars in their pocket from that. The fear is that if COVID-19 hits America in a big way, schools close, then a family earner has to stay home, possibly to take care of the kids. What does that do to lost wages? What if factories close down? What if offices close down? That is what the market is nervous about, and I get it. We all have to hope this doesn't turn into a major, major epidemic in America. But you're cheaping these energy prices going into the spring. So you put it all together, you try to come up with a game plan, and that's what I do for you each morning. Try to imagine. I'm getting up at about 4:30 in the morning. I'm reading everything I can out of Asia, Europe, and about 5:30, 5:45, I'm going to review 40 charts. You're lucky to not see me in my robe and what I'm doing at home, but I am sitting there, and what I am doing is I put on the charts, and they're this color. It has more studies than these, and my idea is to tell you what I'm seeing and what I think the market's going to do, and the difference is because it needs a user ID and password, I say, I want you to buy here. I want you to sell there. Here's your stop order. Here's where I think you can make a move in the market, be it a swing trade, a longer-term trade. That's where I'm able to let my wings fly, if you will. So if you'd like to try this, why not? It's $7.95 for 30 days. That's not a tick in the bonds, the notes, the S&Ps, all those markets. I do them in this sequence each time. So when you go on the website, let's assume you're interested in the meat markets. Let's assume you just want to know about energies. Well, maybe you don't want to see all this. Just pull the cursor and it lights up and tells you what section you're in. You're right there. Now, other people want this onto their pocket mobile. We offer that with it. So you get a full mobile device thrown in with this. It's part of your subscription. $7.95. It's going to give you charts. My videos will play in it. If you get my written recommendations in addition, they're there in all the news of the day, all for commodity markets. Come on, give it a try. Keep this all going, and that'll be fun for you. How do you get to all this? It's simple. You go to our website under www.iraepstein.com, under the word research. Click that on, and away you go. You'll see it explains everything in detail. There's a fact sheet, and you sign up right there. We'll start your subscription come Monday morning. It's that simple. It's a great way to start the mornings, especially in these highly volatile times if you need an ear that's been through this for over 50 years. I'm Ira. You have a good day.